I am not a financial advisor. These videos are all meant for educational purposes only. All complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA Review. Today is September 17, Tuesday, 2024. Hope you had a good day today. So I'm extremely exhausted, so I just want to let you know I had some cousins come in town, and then we ended up partying, and there was in the building at the club was Bobby Schmurder and Ronaldo from soccer, the black guy, not Cristiano Ronaldo, and then some guy named Malone or whatever. But so we've been partying all night last night. I had 3 hours of sleep and I'm running on fumes right now. Try to take a nap. It's very difficult, but and I'm sorry so I dropped the ball yesterday because I forgot to mention that you need to be changing your contract to NQZ 2024. I meant to say that yesterday, and I completely forgot. And then I was gonna even type it in the community tab, and I forgot to do that. So we opened up and we used initially in the support for Asia. We pushed all the way up to that gap. Beautiful. I mean, fucking beautiful right there. Look at that gap inside that gap. Look at that to the tick. And then, man, it came down and rushed for the entire day's liquidity. And this is actually a reversal day. If we close like this, well, it's relative, but it should be a little lower. But this format here is generally a reversal day type of day profile. But anyways, let me try to make this simple, man. So we had a projection here. Remember yesterday that 50% of that daily imbalance, you have to watch yesterday's video. It makes sense. So because I was also saying that Nas might be the one that fails taking out that liquidity, that pool, when and ended up what's it called? S&P did take out that liquidity. See that? So I was mentioning that, and that sure enough did happen. So again, real quick, with FOMC being tomorrow, you do want to tread lightly. You want to not have too much expectations. You're not trying to hold for home runs. I mean, and even if you were trying to position trade, it wouldn't make sense because they're just going to wick you out tomorrow. I mean, at 2 o'clock, whatever direction you think you're going, So that being the case, so this was a nice support. We pushed up and then we closed here. So I was in this fucking trade yesterday, right? And I held it. What was my goal? My goal was to hold it. When I said I was going to hold it, I was holding it for that pool. You have to watch yesterday's video, but I was talking about this equal highs right here, this pool of liquidity right here. And then obviously that would be also included. But this was the conversation for me. Because when we closed here, I was like, we're going to take out that liquidity there and then get to there. Obviously my goal was to get up to here too, right? So, and I held it. So I was in the fucking club last night. And let me tell you something, man. When you have like bad reception, and I'm on my phone, and I was showing my cousin, he's one of the biggest DJs in LA actually. And I was like, yo, look at this. I was up at the time in the club, I was about like up $8,000 right here. It was right here, literally like right before midnight. Matter of fact, the club only opens at midnight. Doesn't even open earlier than that. So more like an after hours place. But so I showed him the fucking the chart, I'm like up $8,000, showing him my phone, the trading view chart, and he's like, damn, that's crazy. And I was like, yeah, I got in earlier today, which was around this time, right in the afternoon. And I'm just holding it because I know we're coming up here. That's what I told him, right? And then, sure enough, when you get bad reception, for some reason, man, when you try to expand the phone, you know how you try to expand the chart. I fucking hit the button. I closed the trade, but I didn't close it. I didn't remember even hitting the actual button. I think it was like while it was like lost in reception, and then while I was spreading it out or whatever, that I guess it counted my thumb as a closing, and I was gonna show that today, but I closed it here and sucked, bro. I was mad. because, and I didn't want to get back in because of where I was. Now, just to show you, if you take a look here, midnight level is right there. So when I saw it, I was like, dude, just push buy right now, because the midnight level had opened, and then this next candle, this midnight 15 candle, the next candle, 15-minute candle, it opened and it dipped down. Let me open it up for you real good so you can see that. You can see this, right? It fucking dipped down right here, right here. Just dipped down and it tagged it. I'm like, and then it bounced and it was hard and it rejected. I was like, bruh. But at the same time, I know it's also a possibility that it's too early in the night that it can come below and work some level below here. So I was like, nah, man, I'm not messing with it. Sure enough, dude, I was right, and man. Bro. So anyway, later in the night, the fucking price is shooting all the way up. I got home at like 5:30, so you can hear my voice sound like shit. But I was sleeping by 6 o'clock. But by the time I was in bed here, my cousin, I told him, I said, look, bro, I fucking told you, dude. And that would have been like a $20,000 trade from there, maybe more. Yeah, about 20,000 though. And anyways, man, so super salty about that. So that being the case, sorry, I didn't mean to veer off here, but thought you might want to know my story. But anyways, the price pushes up. We get to the opening gap of the week right there. Opening gap. We use it as support. We bounce up, and then we start to fan out. So we got a high at 6 in the morning. We retrace back, little support, fake support, and do some liquidity. We push up here and we push up. Now let me go into this time frame over here. So let's try to make this short, man. But damn. So let's see where can I begin. Okay. So keep in mind here, I do see that this big candle right here, this 3:15 in the morning. You see this big ass candle. It's literally like when they got here, they pushed up hard, and then there's no retrace back. So that's a very big eyesore, right? Number one. Number two, I also had that same idea here with this 15-minute imbalance. I have it highlighted here in the lighter blue, and then the darker blue is the one you see, right? So I have that understanding, and I'm pretty much bullish. But I mean, understanding what day is today. You want to trade the AM session, but it's going to be fickle. It's not going to perform and print price like the way you would. And as you see, we got a reversal back. So, but the goal was to take a nice buy. So here's framing the understanding. At this point at 9:30, when we're here, we did take out the previous day's high, right? So we also, and then also the Friday's high. So we also took that. Keep that in mind. So then as we go forward, so here, I got the imbalance, 15-minute imbalance here. And I got that 15-minute imbalance here. So price opens up. So price shoots up and takes out that wick, right? This wick right here at 8:30, which is a data wick. So I'm not even paying attention to any of this. So then what does it do? It wicks and it closes below, rejects. Then and these next candles also reject. So that's very alarming. So as far as buying goes, that's like you got this opening range gap that shows its hand, right? You got the middle level here, which is generally the model for rushing price to it, right? To algorithmically accomplish their task in the day. Look at now they're pushing up. So with that understanding, but I don't know if it's going to be it's Tuesday, so I don't know and Monday was going to probably be the low. So I don't know if Tuesday is going to be that big expansion, right? To get there. I don't know that. So sometimes, and there is a 30% chance that it doesn't come to 50%, that you see that we'll stop right here at that first 25%. So me, I'm literally, I swear on my mother, I'm looking at the chart with my eyes and I'm like, I have like 3 hours of sleep and I was drinking and smoking and the pain of my eyes, I was like, dude, it was hurting my eyes literally to look at the chart. So it was like, I shouldn't even be trading, man, to be honest. So, but anyways, I was just very, I wanted to catch the nice buy. So the price popped up here and then we pulled down. When we pulled down like that, this first imbalance right here, See this first imbalance right here? That's this 933 coming down. That is going to be used in the future, obviously, but we get a push down, we wipe out liquidity, because when I'm buying, I wanna retrace down into a 15-minute imbalance, or take some liquidity, or both, preferably in this case both, and then buy up. And that's exactly what I did. So once this level wicks right into that 50% here of this first 15-minute imbalance, I don't have it highlighted. It would be right there. Okay, so I take the buy. And then boom, I get into this imbalance right here, and I'm like, oh shit, this shit's gonna reject. We're not gonna get that push. It's taking too long, also, and that was another factor. So, once I realized that was the sell, I'm like, I fucked it up, and sure enough, I get out. Right, I get out, and the price pushes down. It hits the opening weak gap in the purple, and then bounces back up, uses that same 15-minute imbalance as a resistance, and you can see it hitting the 50% right here, and then shoots down. Boom. Now it comes to my real target, or my real preferable entry, I should say. And then here I'm also on the oversold, more clear. Here it's kind of floating. I knew that was a suspect ass trade, man, but whatever. I was just tired and impatient. I wanted to just be done and make a trade. So stupid, but whatever. Then price shoots down, and we get to the 50% here, and then we wick down with this 954. We tag that 50% beautifully, and I'm like, let's go. So that's the entry I get in right here. And then sure enough, we push up, and we're now using support. We come down this 954, we tag it, line drawn, nice demand block. We push back up, all right, and then we come back here. We retrace back into now this down candle. This is this 956 candle right here, and then you got the order flow. You know, we're pushing up, we get pushed up, and then we break above this high. So when we break above this high, I see this as okay, no problem. Shift. We're gonna retrace a little bit. Look, they did 3 drives here. This is the reason why today is not a favorable day. Can you trade it? Yes, of course. But you should be doing like what I'm doing. Like, I'm looking for one good move, right? Like, anyways, you get the 3 drives down, and then sure enough, what do? That 15-minute imbalance, that the same one that I failed on, we use as resistance, and we came back above and used it as support. This is why I'm outlining it and drawing it out, so you can see that. So this was the last line of defense as it retraced here. And you're also in these 1, 2, 3, 4 down candles. These 4 down candles. If I do this here, you can also use that, right? Let me just draw it out so you can see it. These consecutive candles, I was also okay with this because I understood where I was, right? So that's sure enough rejection there, no bodies or nothing. And what do? Boom, going right to my target, man. So obviously my first target would be the high that we made, right? So that's the first target. And then the second target would be literally hitting this gap, and then I literally closed it out right here at this gap right here. So, which was beautiful. And also, what's it called? The time factor is in here. What I should have done is just waited for the 950 macro to kick in from 950 to 1010. So here you can see the 54 pushing down, and then now we're retracing back to get onto a tackle of liquidity. So, you know, it is what it is. But, and then here, I took it out because I knew the 1050 macro was going to kick in. But what I really should have did was just sell. But at this point, when I hit this overbought and we hit that we hit that level to the T, I was like, man, you know what, bro? You just walk away. You can't focus, right? But I was very proud of this trade. I'll put it in the community chat. But anyways, so then this candle here, this 1051 has an imbalance. You see that little gap. That means, you know, you can see that it's kicking in. Very minute details that I'm telling you. So write all this stuff down. Retraces back into that imbalance. You could use this as an inversion imbalance as well, but I don't even need that. Not even highlighting it, just looking at that. And then it, boom, came right down, man. It took out that low right there. And so when you're bullish, you don't want to see this, though. You don't want to see this come all the way back right here. This is already suspect for a failure of buying. This move right here was a big. So this is called like a high resistance run, meaning like every time we make a new high, it rejects and it comes back deep. Every time it comes up, rejects, comes back. Like when we took this, came back deep. It's not like the price is stopping in order flow and then it's just like still making a nice, beautiful leg up, right? Like easy, smooth, you know. But what it does is it just keeps coming back in the range, right? So that right there is like red flag number one. Besides it being the day before FOMC, that's flag number two, right? So then the price retraces back, pushes back up, gets into this balanced price range right here. Now here we're using also this that first initial imbalance right here. This is the 933, and dragged it out. You can see here we come back up here on a different time frame. It's a little bit easier. Like on a 5 minute, you can see that the bodies are not like pushing past here. This is just like a 1 minute easy. But this time frame here, not time frame. This balanced price range right in there. See that? So right there, it's sitting in there, and it has a possibility of failing. So if you were holding this buy, if you took this buy as a sweep and to push up, you have a risk of it failing, and that's why you should definitely partial, or if not, trail your stop loss. And if you trail it, just simply, you know, like I'm just gonna take this real quick. Just just drag it per every underneath every 1 minute candle, right? Just keep moving it. And if it takes you out, it takes you out. You rather have the profit than be right. So that being the case, it fails obviously, and then comes below, makes another low, right? And then that right there, now you're thinking, oh, maybe this is 2 drives here, and it's like, okay, cool, but like this is this is not like what you're looking for, right? You don't want that type of trade, and it's super ugly at this point, right? But and then it makes another low. So at this point, if it retraces back, you get like a couple drives up, like 1, 2, 3, like, you know, and this is just like now becoming an inversion. You can see you see that little gap right there. See that little gap? See how the bodies respect it right there? See that beautifully, right? You got to be able to see these things. But after you watch these videos, like you should be able to know how I trade it, how I look at things. But anyways, so that being the case, damn. So that was a kind of like another lower high possibly, and then boom, shoots down. So sure enough, the lunch time is kicking in, and then lunch is looking for liquidity. So when lunch kicks in, it's like, okay, well, is lunch going to try to take out the top side, or is it going to try to take out the bottom side? And pretty much, if you take a look here, we've been performing a speaker, right? So you can see, you can kind of see the origin of prices: high, low, then another. You get these 3 drives up, high, and then you got this low, right? See it? Can you see it? So when I'm up, when I took the price up here, I already knew the price came down, right? So on this top side of the speaker, you can see that we've already did the top side, right? So when we were coming down, that's why I should have took the sell, and I was like, bro, what are you doing? And I understood that we were going to come down and make. So if this is level, let's just put it, if we were to outline the speaker, this is 1, 2, 3. Let me draw it. I'm going to draw it because I want to be clear. 1, 2, 3, 4, 5, right? Now that's generally what you're going to look for. If you're bullish, you're going to look for 5 sequences. I mean, you're definitely going to get the first 1, 2, 3, and 4. Now, if it's so if let's just say we didn't, damn man, there's no way to make this shit short, bro. So let's just say you were bearish. So it's 1, 2, 3, 4. Okay, so you got 4 in. That's a minimum for a speaker. Okay, and then let's just say we went up here and then we failed. That's an idea, right? Or we get, instead of 4, you make 5 right there, 5, and then this last one either comes back in or it just keeps pushing up. right? Whatever how this looks like, whatever ends up happening, we don't know. But in general speaking, my understanding that was when we had 930, we had already pushed a high and we were retracing back, right? But I was just literally a little too zoomed in and just couldn't really think straight. But I should have took the sell down here, and it was literally right where I wanted to go, but should have just been patient and let the price get there. Anyways, now that the price is there, though, I'm going to finish the speaker coming back up, right? So, and then trade for that liquidity here, right? So, that being the case, what did we do? Well, we ended up making another a sixth sequence. So, obviously, in that case, that would look like this, man. Making this fucking way too long, man. And I'm exhausted. Shouldn't even be making this video, but, you know, I don't want to not do it. But so then, you know, the possibility is coming down and breaking those lows, which is, and why did it do that? Well, I'm gonna get to that in a second. Oh man, I'm tired. So the price is dangling around that first 25%, and then we come underneath, back to that 15 imbalance that failed me. Look how we come underneath it right here with this 12-11, and we tagged that 50%. This is a trade in a model all in itself, knowing that if you're gonna come below here, knowing that these are lower lows and lower highs starting to form, knowing that this 15-minute imbalance is now just going to be used as an inversion, well, there's your little ticket right there too, right? Plus, it's sort of in the wheelhouse of the time frame of your 1150 to 1210 macro, but you know, that's beside the point. But anyways, what are they doing? And then we're also coming down to, not forget, possibly reseal this entire opening range gaps. So, you know, that's the big ticket there too. So plus when I was mentioning in the beginning of the video about that midnight, how we didn't come below the midnight level at all. Well, that there's another purpose. Look how we come right down to not just only the midnight level, but we also have the opening gap of today right there, as you see that from 6 p.m. yesterday. So that right here is another very high confluence magnet. And that's another reason to take these sells here. And then what did we do? We just, I'm assuming, fanning out as we're doing. Yep. So ranging drive 2, drive 3, right? Popping up here, retracing back into this last down candle. Look at this. This is very, very common. Didn't even look at this chart. I was trying to take a nap, but where are you? Bam. Look at that level perfectly. So I don't know. I don't know if this is gonna fail or not. But anyways, and then we came back up here. So, oh boy, please don't say it's 22 minutes. Fuck. Okay, so real quick, I'm gonna try to make this be done. So you can see here, we also, the purpose of us pushing up initially was when, you know, obviously when 930 pushed down for Nas, we took out some liquidity there, and we had higher lows right here at the time with Nas. I mean with S&P, and then you can see we broke that low here. We're talking about the 3:50 a.m. 5-minute chart. Those lows right there. We took that out with Nas. We did not take it out with S&P, and we did take out that with Dow. So that was another reason why I pushed buy. I mean, it was like literally a last confirmation, and plus also sometimes if I miss these, I know that my trade has a potential of the right direction because I have that behind me too. So that being the case, when we get up here though, this is, my goodness, this was a beautiful option to sell. You had lower highs here with Dow, and you had higher highs with Nas and S&P. So that pushed us all the way back down, buddy. And then when we got down here, we did have a higher low here, and lower lows here, lower lows here. So that's that. So dollar, and I can understand if someone was looking for sells because of the buys here with dollar. Even though dollar looked real, I mean, you know, because I mean that looked like it's like one step away from sinking, which I'm not saying it can't, but but you notice the price has been sitting here for a while, And that's maybe because they were holding price to then, because I said, remember, if we're going up with dollar, then we're going to probably come down. But they were holding it for the objectives for us to get what we were getting so they can wipe out liquidity. And then if they push dollar up, then that would now bring us back down instead of us being bullish, right? So that's dollar, and Dow just fanned out as well. Made another all-time high. So, and then what's it called? I'm just gonna zoom out. You don't need to see all this. I mean, that's sloppy, dude. I don't know why anybody would want to trade Dow anymore. I mean, the wicks, the precision, it's just ugly, bro. Stay away from it, man. Trust me, I tell you, life has been so beautiful without Dow. And then look at S&P. S&P did take out that high right there, like I was mentioning. So that's clean. And then where do we go from here? So the big question is, I was mentioning yesterday. Was it yesterday? Yeah, it was yesterday. I was saying, maybe even I mentioned it Friday, but I said Nas is maybe the weak asset. If you look at Nas, we have not took out that high. So this could be a divergence happening now where we have higher highs with S&P, we have higher highs with Dow, and well, that doesn't really, it's not really in the picture here, but does again. But tomorrow, because of it being FOMC and rates, are they going to cut 50 basis points or whatever the numbers are? That could easily spike up and shoot. I'm assuming that if they do cut a rate or two, if they take it easy, I think we can see a nice little rally. But if they cut too much, that could also be a problem where we could also be very bearish because of that. So, but and if you look at the historical data or history of those rate announcements, generally speaking, we will get a little rally for a day or two or that week for at least, and then maybe come down. Or in this case, we might get it for 30 days and then be in a recession. I don't know, but that's just like my general understanding. In general speaking, for FOMC, we will generally fall down. We'll shoot down first, and then at 2:30 we'll start to make our way back up. Just like the original video on this YouTube channel. If you watch it, it's a live video. It's the same exact day. I think. I think it was whatever. Point is, our chart here, we did come back to the 50% of that daily imbalance again. See that right there? That's not by accident. So I don't know, man. I mean, I wouldn't. Us coming down already this far here on Monday is one thing, but for us to come back down this deep on Tuesday, it doesn't look good for me on the bull side. But we would have to be a really bearish like world where we don't break that high and we literally just sell from here. It'd be kind of like one of those double tops here, and then it just kind of sinks over to take these lows out. But for some reason, I don't know. But there is no wick on this candle this September 9th. So I'm not saying that we're not coming back down. I think we will, but I think the way they do it is going to be not what you expect. But look, there's no wick right there. I'm not going to draw it, but you're going to see it now. September 9th, right there. That's the previous, what is that? That's the previous week's high. Low, previous week's low. Obviously, we just took out the previous highs, previous week's high, but that month high is looking real juicy, man. Plus, that possible imbalance. So sorry, I forgot to mention about the changing your contract to Z. I'm sure you knew that already, but you'll know by when it's on the 1 minute, it's very choppy and all the candles, there's a million gaps. That'll let you know to go to the next contract. It usually expires on the 19th, but traders normally change it on the 17th or a couple of days before. You'll see that in the volume. But where am I missing here? I know I'm missing something, man. I missed so much shit. And then so we're still sitting there, not looking good. I mean, it's gonna be an unnatural move. So do you see a push up hard like this, or do you see a push up down Right now, down looks natural. It does. It does look more natural. But yeah, we might just grab the top and then pull down. I don't know, man. I don't care either. So I wouldn't trade tomorrow. If you did, um, it would need to be after 2:30 at minimum. I would say 2:45 is when you want to probably trade if you do it all. You're not missing nothing. You don't have to worry about it, dude. Like, you know, there's no rush. So other than that, I feel like I'm missing something, dude. No, I think I've said everything, man. I really do. I really do. And there's a trade just for if you didn't believe me. Sad that I have to do this. All right, you guys take care and God bless.